evening. Hello and welcome to this edition of Markets Tomorrow. I'm Naitara Rai in New Delhi. Pankaj joining in from Mumbai. Hi Pankaj, what a super duper Thursday it turned out to be.
Absolutely, it's a Thursday thriller for investors on D Street. Nifty marches to historic highs, surpassing the previous peak of 11,172. PSU lenders are one of the best gainers in the sessions today. Bajaj Twins are the star performers, followed by TCS in the lag of this record run.
So that's the big market story, of course, but here are the headlines that we're tracking today on Markets Tomorrow. An announcement imminent on Hindalco's latest acquisition. The metal giant's Canadian arm Novelis is expected to buy a 100% stake in Aleris in a deal valued at over $2.5 billion. Overvaluation worries proved to be a big drag on the shares. Kumar Mangalam Birla will be addressing a press conference in about 15 minutes from now.
Maruti hits a speed bump in trade, emerging as the top index loser after first quarter earnings, leaves much to be desired. Higher commodity costs dents profits and margin, but management assures of initiatives like price hikes to offset cost pressures.
Dr. Reddy swallows a sweet pill. The margins take the stock higher in trade. It ends in the green following a healthy first quarter report card. Suboxone launch, coupled with operational efficiencies, is what aided the pharmaceutical giant's performance.
Worsening asset quality takes a toll on Yes Bank shares. Gross NPA jump over 7%, even as profits and NII meet expectation.
And it's a very busy day of earnings. Maruti has been announced. We're on standby for Airtel. They could announce its quarterly loss and average revenue per user trending lower. ITC also yet to come out with its numbers. Is it going to be a smoking hot quarter or not? FMCG business as again expected to drive the conglomerate's top line growth.
Watch out for the retail business of Reliance in the quarter. Okay, I think we are getting this. Novelis to buy downstream aluminium producer Aleris. This is the news flow that has come in. This is the news flow, which was expected in the Hindalco press conference. Novelis is the arm of Hindalco, and they have gone ahead and picked up Aleris. Now, this is, of course, an aluminium company. It's likely to be a big one with about $2 billion, and that's a big acquisition, when it comes in. So, finally, Hindalco announces the acquisition. It will be via its subsidiary Novelis. The deal is valued at about $2.6 billion, including the debt. So, which means that it is the enterprise value of Okay, Mubina is now with us. Mubina, $2.6 billion enterprise value, in line with expectations?
In line with expectations, bang in line with expectations, and that is something that really perturbed the street, because we were talking about the fact that $2.5 billion and an expected EBITDA, well, at least the EBITDA that they did post in 2017, Aleris, was at about $200 odd million. So the expected EV EBITDA for FY19 comes to approximately 7 times if we do take $2.6 billion. But I think I'm jumping ahead of myself. Just a quick recap for our viewers. Novelis, US subsidiary of Hindalco, is going to be buying a US-based aluminium rolling firm, that's Aleris. It's got quite an interesting history, because in 2009, in fact, the firm had got bankrupt, and then subsequently there was a Chinese company that did try to buy it, but then it got really involved in the entire US regulations, and finally the government stepped in and stopped the buyout. But yeah, this is the latest that we are picking out. Novelis is going to be buying out Aleris, which does have interest in construction, in automotive, and in aerospace in a big way. It also, interestingly, of course, naturally has some of the biggest revenues coming in from the United States. 51% odd of its revenues come in from the United States, which means that this buy does essentially firm up Novelis' foothold in not only the US markets, but also in the Europe markets, from where Aleris gets about 46% of its revenues, and then about 4% odd from Asia. But yeah, this is an important one, because after the Novelis buyout that Kumar Mangalam Birla did bring about almost 11 years ago, that one was for a whopping $5 billion. In fact, I think it was a little more than $5 billion. This one funds coming in now. It's another big entry by Kumar Mangalam Birla into the United States market. Now, for Novelis, remember, Novelis has been getting a lot of money from the automotive space. Year after year, quarter after quarter, we have been getting positive commentary from Novelis from the automotive space. They want to increase the revenue share that they get from autos to 25%. Naturally, with Aleris getting a major chunk of its revenues from automotive, this would be a good fit because it essentially does consolidate Novelis' position in the CAN as well as automotive space. It increases their position in the downstream automotive space and in general in the specialty products as well. Plus, Aleris itself had invested about $425 million in an automotive body sheet unit in Kentucky. So with this buyout, Novelis is saving on the greenfield capacity investment that it would have to make, including the time, and it's just directly getting another 1 million tons to its already existing capacity of 3.6 million tons. So all in all, operationally, and yeah, in fact, reports are also suggesting the fact that, there is good synergies between Novelis and Aleris in terms of their operations worldwide. Now talking about the numbers. We do have Aleris putting in an EBITDA of almost about $105 million additionally from aerospace and auto. Plus, 2017 EBITDA saw a hit of almost $38 million. So I think fair to add these two amounts to get an adjusted EBITDA value of what EBITDA would look like in 2019. And that comes to approximately $326 million. With such an EBITDA, Hindalco seems to be wanting to pay $2.6 billion. So that's how I've come to a rough valuation of 8 times EV EBITDA. Now, we're getting very mixed responses on how exactly the street is looking at such a valuation of 8 times. Yes, recent M&A deals in the metal space have concluded at about 7 times EV EBITDA. This is at 8 times EV EBITDA. It's not all that bad, but it's not all that great either. I guess maybe Mr. Birla could have asked for a better bargain from Aleris, but they did catch Aleris at the top of their game. I mean, you're talking about $425 million being invested for a Kentucky plant. So naturally, they are catching them at the top of their game. That's one part of the equation. The second part is the EBITDA front. Now, and the deal front, of course, the debt front, because Hindalco already on a consolidated basis has a debt of 43,227 crore rupees. I'm making a very big assumption here, but if I have to say that this $2.6 billion is going to be completely made via debt, then the debt figure would rise from 43,200 crores to 60-odd thousand crore rupees. So they are paying another, 14-odd thousand crore rupees for an EBITDA of extra 2,000-odd crore rupees. So prior to the deal, the debt stands at 43,000 crores, EBITDA stands at 13,800 crores. Post the deal, the debt could, I'm saying could because we still don't know how Hindalco is going to fund this deal, but yeah, the debt could stand to 60,000 plus crore rupees with the EBITDA coming to 16,000 crore rupees. And there you have it on your screens, Mr. Kumar Mangalam Birla, who reports suggest has been personally involved in ensuring that this deal does go through. It's one of the biggest deals naturally that, the Birla Group has conducted in the recent past. Next to him is, of course, Mr. Steve Fisher as well, the president for Novelis. We'll also, in fact, be joined by Mr. Satish Pai, who is, of course, heading Hindalco back home in India. And there you have it, that in fact Steve Fisher as well. I guess it's quite a momentous day for him. It's a big acquisition by Novelis, $2.6 billion. That's really no mean feat. And like I said, 11 years after Hindalco made its first entry into the United States via Novelis, this would be the second big acquisition by Hindalco. And just a couple of moments from now, I think they're going to speak on this deal. But yeah, just for all of our viewers who have tuned in now, Novelis has announced the Aleris acquisition. It's for an amount of $2.6 billion. Aleris is a US-based aluminium rolling firm. They have recently, in fact, invested in an automotive body sheet unit in Kentucky for a little in excess of $400 million. So it's a good fit with Novelis, which in turn is trying to expand its business not only in the United States, but also in the automotive space, from where it has been getting a decent chunk of revenues. It has been getting a decent chunk of EBITDA margins, and this will essentially help Novelis consolidate its position in the automotive space. This is what the Aleris deal could do. And in moments from now, Mr. Kumar Mangalam Birla is going to speak. And I'm sure the very first question that's going to be posed to him is this valuation of $2.6 billion justified? It comes versus an EBITDA, an expected EBITDA for calendar year 2019 of in excess of about $350 million. So yeah, the question, of course, will be that with this valuation, how is he going to justify it? We all do know all the advantages and disadvantages. But yeah, Novelis for sure. After that acquisition, we are 11 years down. Undoubtedly, it did work wonders for Hindalco. Now it's almost about 60% of the revenues do come from Novelis, you know. So let's see if Aleris itself can in fact work magic this time around for Hindalco. And I think in just moments from now, guys, we can just cut into that conversation with Mr. Kumar Mangalam Birla.
Mubina, he hasn't started speaking as yet. You know, of course, that there could perhaps be a lot of synergy between the two companies. For example, you're talking about the automotive sheets that Aleris produces in Kentucky, etc. I just want to have another question from the shareholders' perspective and the market's perspective as well. This is a big gamble by Novelis, by Hindalco. And what is it going to mean for the balance sheet? For example, there are fears that the net-to-debt equity ratio could actually, EBITDA ratio could jump to over 3 times, 3.3 times. That's, you know, much higher than the industry average.
EV/EBITDA is at about 2.5 times, and yeah, now post you know, all the adjustments, it could jump to 3.3 times, and that's the reason why, Nayantara, we've seen in fact the stock price as well not so positively react to such a news, you know, especially after what Novelis did to Hindalco. The street's looking a bit circumspect when it comes to this deal, which, like you said, comes to about 3.2, 3.3 times. And by the way, I do have some comments coming in from from the CFO of Novelis. He says that their focus will continue to be on keeping a disciplined balance sheet, and the pro forma net debt to adjusted EBITDA is forecasted to peak below 4 times at closing and return to 3 times in approximately 2 years. So in fact, Nayantara, what the figure that you were citing, it may, in fact, more than that at about 4 odd times. But nevertheless, you know, I'm sure Mr. Birla, Mr. Fisher are going to downplay that bit and say more tom-tom about the fact that this essentially will solidify their position as the world's #1 aluminium player.
Right. Mubina, you were giving us the valuations, and I know that you would work your Excel sheet once again. But, you know, just on the face of it, Novelis has $396 a ton in terms of EBITDA. The other company has 256. So, you know, considering the sort of investments that they have done, there is a huge upside possible to that EBITDA per ton.
That's right. Pankaj, yes, that it could be, because, you know, we are looking, like I said, if we have to look at the average Aleris product mix, most of it comes from construction. It also comes from automotive. Now, not so much construction, but automotive and aerospace. I think let's go across to Mr. Birla.
Yes, my colleagues on the dais. My far right, we have Deva Ahuja, who is the CFO of Novelis. On my right, all of you know Satish. On my left, we have Steve Fisher, who is the CEO of Novelis. And after him, there's Praveen Maheshwari, who's the CFO of Hindalco. We are pleased to inform you of another milestone in the metals business. All of you know, of course, Novelis very well. And Novelis today has signed an agreement to acquire a company by the name of Aleris. Let me tell you a little bit about Aleris. Aleris is one of the leading privately held aluminum rolled products company globally, and is to be acquired by Hindalco for $2.58 billion. Let me, before getting into the details about Aleris, walk you through the current position of Hindalco. Hindalco, as you know, is a leading global player in the non-ferrous metal segment, and with Novelis is globally the #1 player in the aluminium downstream business, as also a major player in the copper segment. Hindalco has had a phenomenal track record of performance, including in the area of project implementation. Last year, as some of you probably know again, was a remarkable year on every front. Record production of both aluminium and of copper, highest shipments at Novelis, highest revenue of $18 billion, and the highest EBITDA for the company as a whole of $2.2 billion. All of our plants operated most efficiently. For instance, both the new smelters, Aditya and Mahan, are amongst the lowest cost globally. And at the same time, Utkal Alumina in Odisha is amongst the lowest cost alumina producers globally. Birla Copper is one of the largest copper custom smelters at a single location in Asia. Let me now take you through the key terms of the definitive agreement that Novelis has signed today. Novelis has entered into a definitive agreement to acquire Aleris for an enterprise value of $2.58 billion. This basically is broken up into $775 million for the equity part of it, the balance being debt $1.8 billion. This is debt that Aleris has on its balance sheet already that Novelis will be acquiring. Additionally, there will also be a earnout payment of $50 million, and my colleagues can take you through that in more detail in the Q&A after this. There will be no equity issuance, not from Hindalco obviously, and not even from Novelis, and therefore the deal will be fully financed in the books of Novelis. We expect that the transaction will close in the next 9 to 15 months, and I believe that this is really the right opportunity for Novelis coming in at the right time. Let me talk to you about Aleris in a little more detail. Aleris, like I said some time back, is a leading global aluminium rolled product company. It has a diverse range of products. It is a global supplier of both aerospace and automotive sheets. It is the leader in the building and construction segment and the truck trailer segment, both in North America. Aleris, interestingly, also has multi-year agreements with some blue-chip customers. Its shipments in the year 2017 were about 800,000 tons with a revenue of $3 billion. So it's obviously a very substantial player in the downstream aluminum rolled market globally. It employs about 5,400 people. It has 13 high-capability manufacturing facilities across North America, Europe, and Asia. Importantly, it has also made investments of around $900 million in the last 3 to 4 years. And these, we believe, will now start to drive earnings and cash flow momentum from the next financial year itself. As I mentioned earlier, and as you know, Novelis is the world's #1 aluminium rolled products player. Post-acquisition, the combined entity will have a capacity of 4.7 million tons per annum, which includes Hindalco in India. And very obviously, this acquisition will solidify Novelis' position as a leader globally. Again, let me take you through the key highlights of the acquisition. As you will see later in the session, Aleris today is on the cusp of what I would call transformational growth. It has invested in the last 3 or 4 years almost $900 million in new assets to support largely its aerospace and automotive businesses. And I see great opportunities to use Novelis' know-how to leverage Aleris' production assets. There is also very solid strategic rationale behind this acquisition. It very importantly diversifies our product mix to include some premium segments where Novelis has not been present, such as, in particular, the high-end aerospace domain. It also helps to integrate both the company's assets in Asia, so both of the assets of Aleris and Novelis in recycling, casting, rolling, finishing capabilities, and therefore it brings about enhanced operational efficiencies and a much more solid presence in Asia. This deal therefore helps to meet the growing demand in the fastest growing aluminum automotive market, which is China, which is growing, also a sector that is growing globally at 14% per annum. And of course, it helps diversify and therefore de-risk in terms of giving us a larger customer base. Moving on to the funding, as I said earlier, it will be a 100% debt-funded deal, and it will be on Novelis' books. And as you all well know, we have always focused on healthy financials and keeping a very healthy balance sheet, which is a philosophy that we follow and continue to follow, will continue to follow. If you look at broad financials, the pro forma net debt to adjusted EBITDA for the combined entity at Novelis, which is after taking in Aleris, is forecast to peak below 4 times at the close of the transaction. And particular to note that this comes back to 3 times in a short time of 2 years after the transaction is closed. Hindalco as a whole, net debt to EBITDA is projected to stay below 3.5 at the time of the close of the transaction, and again comes down very quickly within 2 years to 3 times. So as you can see, the bite size is very much in keeping with the affordability, not to, of course, mention the quality of the asset and its appropriateness to Hindalco and, of course, to Novelis. Aleris helps diversify Novelis' product portfolio to enrich it. So to give an example, currently Novelis, the sales of Novelis are made up of 61% of beverage cans, auto 21%, and specialties 19%. What happens after this acquisition? After this acquisition, new sectors such as aerospace, building and construction, truck trailers also come into the fold of Novelis. These are sectors where, like I said, Novelis does not have a presence today. Therefore, it diversifies our product mix. It gives us a new set of customers in the auto segment where it deepens our presence. The share of auto goes up from 20% to 22% for the Novelis-Aleris combined entity. And as some of the organic expansion investments that we have made recently in Novelis and the large investment in Lewisport in Aleris start to ramp up, the share of auto in the product mix will actually go up in the next few years to 30%, which is in keeping with Novelis's philosophy and stated strategy of increasing the mix of auto in its product portfolio. Beverage can, on the other hand, will continue to remain at 47%. All in all, what it does for us is that it gives us a presence in market segments where we do not exist just now, and in doing so, it increases the share of high-margin products for the portfolio as a whole. So, for example, Novelis gets an entry into the high-end aerospace segment. Aleris also has a world-class R&D center in Koblenz in Germany, besides having very well established manufacturing capabilities in both Europe and Asia. As all of us know, the overall demand for airline travel is rapidly growing, especially in this part of the world in Asia. And aluminium, we believe, will continue to be the most used material in aircrafts over the foreseeable future. The aerospace market is dominated by Airbus and Boeing, followed by Bombardier, and Aleris, interestingly, and very importantly, has long-term contracts with these blue-chip companies for various aerospace products, and these are companies who take more than 8 years to give approval. So this is something that we're buying into when we buy into Aleris. The acquisition also further solidifies our position in the value-added product space. Like I just mentioned, it enhances our competitive position in Asia. We have recently announced 100,000 tons expansion of auto finishing line at Novelis in China, taking the overall capacity of Novelis in China to 200,000 tons. Aleris has recently commissioned a facility very close by at a place called Zhenjiang, which taken together deepens our presence in China, which again is one of the stated objectives and ambitions of Novelis, which is to grow its presence in the fast-growing Chinese market. So these two plants, ours, that is Novelis's, and Aleris's, complement each other in terms of the asset set to serve the fastest-growing automotive market in the world, China, and at the same time, they create significant synergies. Given that the demand for aluminum is also growing strongly in the automotive sector, this acquisition enhances our ability to innovate high-strength, lightweight aluminium solutions to better compete against steel in automobiles. Again, this is a stated ambition for Novelis. I'm trying to underline the fact that this acquisition strengthens and takes forward the company into towards accomplishing several of the objectives and strategies, ambitions that it has set out for itself. It also widens our automotive customer base and the vehicle platform base. It also has key strategic assets serving the automotive market, including its new finishing lines in Lewisport, which is in Kentucky in the US. Interestingly, a significant volume of this plant is already contracted. That's an advantage to us as we buy Aleris. There is also over and above 100,000 tons of automotive capacity in Duffels in Belgium, which again will be of great advantage to us. And all in all, the larger and diversified asset base de-risks us essentially by expanding the customer base that we will be selling to. Let me also now talk about how this will impact Hindalco in India. We believe that the Indian aluminium market is today at an inflection point. Aluminium consumption today is largely skewed towards the electrical sector and by way of wire rods, and towards the auto sector by way of casting. But looking forward, we see a rapid increase in the use of aluminium in building and construction, in transport and auto, railways, aerospace, defense, and the solar panel segments, to mention a few. And therefore, we believe that the next phase of aluminium growth in India is expected to be in the segments of flat roll products and extrusions. In sync with this and to maintain its leadership, Hindalco plans to double its capacity of value-added products in the next 5 years. Again, this is a stated ambition of Hindalco's, for which a capex of $1 billion over the next 5 years has been earmarked. In the context of this, access to Aleris's cost-effective, continuous cast capabilities would significantly boost Hindalco's ambitions in foraying into the building and construction and transport sectors. I also believe that this will bring in the expertise in making a higher-end product range in India as compared to what we have today, and will of course contribute to Hindalco's effort in the Make in India program. So to sum up, I would like to assert that Aleris is a value-accretive acquisition for Hindalco, and Novelis, interestingly, it is accretive from the first year itself, both in terms of cash flows and in terms of net profit, which is very rare for an acquisition as large as this. As you know, Novelis today is the world's largest rolled product company, and with this acquisition, it not only solidifies that position, but it emerges with an even more diversified portfolio comprising of not just beverage cans, but also automotives more deeply, and the newly added high-end aerospace segment as well. It also gives access to Aleris' technology for Hindalco's existing aluminium value-added business in India, and will help particularly as Hindalco makes a foray in the building and construction and transport segments. Like I said earlier, the combined entity will have very strong financials, both from the quality of balance sheet and cash flow generation perspective, and supported by the recently made strategic investments in Aleris. There will be fund flows coming from these investments that are only partially ramping up in the first year after the acquisition. The potential benefits of this acquisition in terms of synergies is about $150 million on a recurring basis, and these are achieved largely through integration of the operations of both the companies in Asia, in supply chain coming together, and in sales and G&A optimization. Let me reiterate that this acquisition will be done at an enterprise value of $2.58 billion and based on an expected EBITDA of $360 million in the year just post-closing of the transaction. This leads to an EV of a very attractive 7.2 times. That is something that I think is of particular importance to this transaction. An attractive valuation of 7.2 times when you look at the EBITDA in the year just after the acquisition is complete. In terms of balance sheet, the net debt to adjusted EBITDA for the merged entity at Novelis is forecasted to peak below 4 times at the time of closing and come down very quickly to 3 times within just 2 years of the taking over of Aleris. And at the Hindalco level, the consolidated net debt to EBITDA is projected to stay below 3.5 times at closing and expected to come down to 3 times and below 3 times within 2 years. So that is in terms of the health of the balance sheet and cash flows post such a large acquisition. So finally, we all believe that this, once completed, will lead to the creation of a company with a revenue base of $21 billion and an employee base of about 40,000 people. And the combined entity will be the largest aluminum company outside of China and the second largest in size globally. Thank you. Very happy to take questions.
That's on a recurring basis. So if you are closing this transaction 9 to 15 months from now, in which quarter of which financial year are we going to see the full benefit kicking in? And what do you mean by recurring? For how many years? If you can explain that, please. So
as you know, the difficult part of answering questions I never do, right? So I'm going to request Steve to take this question.
Sure.
Sure. Is this okay? So the synergies you should think of in 2 buckets. One, transformational synergies, and another bucket is more traditional synergies. The traditional synergies we'll achieve very quickly within the first 2 to 3 years, and those are primarily optimization of supply chain, procurement, savings, SG&A optimization, and so forth. The second large synergy bucket, which makes up about another 50%, is this integration of our Asian assets and backward integration specifically in China, in order for us to have access to Shefi metal. Those benefits will come post 3 years after the acquisition.
So first will kicking in which quarter of which financial year?
We'll begin planning integration immediately and hit the ground running and try and achieve them as quickly as possible.
Clarity on $50 million, you said earn-out payment besides $2.58 billion. What is that, if you can explain?
So there's a certain earnings in North America from the North American asset that have been agreed to. And if earnings are above that, then Novelis is committing to pay up to $50 million at the max for earnings higher than those that have been agreed to in the business plan.
And any more investment in terms of the expansion projects already taken on by Aleris that could be required after the acquisition is done?
So I think the main point that Mr. Birla made is that majority of the investments of Aleris, which is really 900 million, has already been put in. And hence we are going to get the benefit of those investments that are already made. As Steve said, the only investment we will make is for the China integration, which is one part of the synergy. So that is the only investment we'll make, because we will combine our automotive line in China with the Aleris's plant there.
How much will that cost?
That is about 300 to 350 million that we will have to invest.
In,
Mr. Birla, Ashwin Mohan here from ET now.
Over how many years will that be?
That will be over the next 2 to 3 years.
So 2 to 3 years, additional $350 million of investment expected. $360 million of EBITDA you are claiming to achieve for Aleris after it has done CY17 at $201 million. That's a tall order.
So actually this is the important point that Mr. Birla was saying, because Aleris's Lewisport automotive asset is a large part of that 900 million investment that they did, which is nearly $425 to $450 million. That has now been commissioned and is ramping up with qualified customers taking 60% of the volume, which is why we are taking that EBITDA, which is going to be coming in this year and during the time of the closing. So within the year of us closing, the EBITDA of Aleris will be 360 million. And if you actually look at Aleris' own presentation that they put up in the refi, they make this point very clear. So which is why we get the valuation of 7.2. So this does not include any synergies. It's only the EBITDA coming from the Lewisport automotive asset, which is taking us to 360 million. The synergies will be on top of it.
So essentially, it's $900 million of investment that are still to give complete returns from facilities that are yet ramping up.
So automotive segment is going to ramp up. So if you can give us the roadmap for that, because that is the high margin product which you are trying to capitalize on with this acquisition, Mr. Pai.
So I think we'll be at full capacity in Aleris' plants within 2 years of the acquisition, at the very most.
All right, one more question. North America is the largest market for Novelis, and with this acquisition, even Aleris has a huge footprint there. What is the total market share that you will have as a combined entity in North America and Europe, which are the revenue-generating markets?
Sure. For Novelis, about 35% of all of our market is in North America, and then another 30% in Europe, and then it splits between South America and Asia. From a market share standpoint, you got to go down to the product level, and from a can, there is no overlap. From an aerospace, there's no overlap. They are in different products in North America in building and construction than what Novelis is in. So very little overlap. Where there is overlap is in the auto sheet business that is growing. And in that overlap, we see great diversification as it relates to our customer base and our facilities basis to continue to serve these customers in North America and globally.
Okay, we had a question here.
Yeah, thanks, Mr. Birla. Mr. Birla, what explains the shift gradually that we are seeing at Hindalco towards value-added products? And you spoke about the fact that two of the major sectors where you will benefit post this acquisition would be automotive and high-end aviation segments. Why are you betting so heavily on these two segments as compared to others?
So it's in keeping with Hindalco's and Novelis' strategy of getting into a higher value-added product mix. Essentially, higher margins, less dependent on the LME, therefore much lower volatility. These are the two key reasons why we want to move towards a higher value-added product mix.
All right.
Good evening,
And
sir.
Mr.
This is
Birla, this
Nidhi
Abhinay
Rai from CNBC here. CNBC Awas, hi.
Yeah.
I'm Nidhi. Sir, I just wanted to understand about the approvals. Has the US regulator already approved, or after, once you are done signing the deal, then you will be approaching them?
Steve.
Yes, so there is no pre-approvals in the U.S., and so there is a number of regulatory hurdles that we'll have to go through. We feel very confident on. First would be the Committee on Foreign Investments in the United States. And then we'd also have to clear antitrust approvals both in the U.S., in the EU, and also in China.
I also wanted to understand that we were going through some research, and Moody's has, in 2018, they have said that they have downgraded the rating of the company. So I wanted to understand, before investing, on what grounds and what synergies you were looking forward for.
Dave, you want to take that?
So that's not accurate. We have not been downgraded. In fact,
not you, sir, but the company in which Aleris International.
Okay, so I think that Aleris has been in an investment mode. They have been in a heavy 900 million investment cycle, because of which, the debt on their balance sheet went up. So the rating agencies in these matters become very conservative. And for us, actually, the timing is just perfect, because all those investments are made, and we are right here to get all the synergies out of these investments. It was basically the heavy investment phase of Aleris, as a result of which the rating agencies took a conservative view.
Gentlemen, Kevin here from CNBC. If I understand correctly, Novelis now contributes about 60% to the consolidated revenues of Hindalco. What does this number go up to post the acquisition for Novelis and Aleris?
So the Sorry, of the 21 billion of the combined revenue, Novelis plus Aleris will be about 15. Am I right? Yeah. So 15 will be Novelis Aleris of the 21 billion in revenue.
And any liability on the pension side or any legacy contracts post the acquisition?
So yes, the liabilities on the pension side are 200 million, but then, these liabilities don't really materialize. They materialize over many years. So in all our valuation, we have considered the cycle over which the pension maturities will happen, the cash outflows will happen. So that's already baked into our valuation.
Mr. Birla, this is Sajid here from Bloomberg Quint. Just wanted to get your on the debt front, or especially Novelis, because it's going to be debt-funded acquisition. What is the current debt at Novelis, and what is the timeline you have of reducing the Novelis debt over a period of time? Because you gave an idea about how net debt to EBITDA, adjusted EBITDA, would be falling over a period of next 2 years upon closing. So, can you give us an idea of how that reduction plan you have on that?
All right. So the current net debt at Novelis is about 3.5 billion. Now, with the acquisition being fully debt funded, the total debt we will be adding is about 2.6 billion. So altogether, even after this, we will actually be at a debt to EBITDA ratio of less than 4. And with the cash flow generation that we are having, if we factor in all the investments that we are making, and if we just net out everything, we think that within 2 years we will come back to our current levels. As a combined company, we will come back to around 3 within 2 years.
A debt of around what, $3 or $4 billion?
Well, so I'm not going to get into that specific number because that's like giving away the EBITDA. But all that I can tell you is that with all the calculations that we have, we should be within a very, very healthy 3 times.
And Aleris recently undertook the expansion plan of $900 million. Once the full stream starts working, what is the kind of additional revenue generated from that expanded capital?
All right. So basically, when the facilities are fully expanded, rather than going into revenues which depend on aluminum prices, and ours is a pass-through model. Aleris's model and our model is a pass-through model. So I would rather talk about EBITDA, and as was mentioned earlier. If we take the full ramp up, we'll be at 360 million within the first year of acquisition. And after that, we will see how the growth curve, goes, but it will be a very positive growth curve after that as well.